Folks, welcome back to the Schaeffer's Market Mashup. Patrick Martin here, October 6th, Wednesday, with another fan favorite. We've got Jermal Chandler of tastytrade back again. Jermal, we haven't chatted since May. So, how was your summer? What are the top 3 things that you did?
Hey Mark, what's happening, man? Do people call you that? Is that an acceptable nickname?
In high school, yeah, that was P. Marty was one of them. So yeah, I'll allow it.
Yeah, man, it's been a while since we talked. Good to be on again for sure. Love talking to you guys at Schaeffer's. And as far as the summer, man, it feels like things just flew by. We did my wife and I, we tried to do a bunch of things, to get out, right? Like we've all been kind of locked away. So, God, if I can recall, I mean, we actually went to a Banksy exhibit, which was pretty cool earlier. Actually, that was more recent. We did that a couple months ago. We also did like a Van Gogh exhibit, so we had a little art thing going on throughout the summer. Definitely stuff with my kids. My youngest is playing a bunch of sports right now. He's playing flag football. He did baseball. Actually, he won a championship for his little baseball team. It was like coach pitch this year, so that was cool. It was my 9-year-old.
Congrats. Standing ovation right there.
Thanks, man. It was pretty fun. And, my daughter just had her Sweet 16 about a month ago. And then my oldest, who actually turns 18 on Friday, he's playing football. He caught a touchdown on senior night. Senior night was pretty nuts. It makes you feel a little old, but it's pretty cool, man. So, yeah, lots going on. Lots going on the personal.
That's awesome. What is he, a wide receiver, tight end, or?
Yeah, you got it. He's a wide receiver. It's actually his first year playing football. He started playing during the pandemic, and they had a mini season in the spring, which usually football's fall, right? Mm-hmm. So they had a season in the spring, and that was cool because he got his feet wet, and so now he's starting off this season playing. He's like maybe the second third as far as like wide receivers in the lineup. So he's working to get time, which I think is a great thing. Actually, he learns that nothing is guaranteed; everything is earned.
Yeah, I've got a lot of respect for any high school, college athlete that just had to go through their seasons in the past, 18 months with the pandemic and everything, and then balancing school on top of that. I don't know how I would have done it. Kudos to them, and hopefully, that's, like you said, gives them some serious life skills going forward. Yeah,
for sure, man. I mean, I don't know if I would have been able to handle it neither. All of this freedom that they've gotten over the last year. So I'm kind of glad there's a little more structure now as we're in the fall.
Yeah, knowing how I was in high school and to start college, I needed as much structure as possible. So
yeah, same here.
I needed it. Anyway, I heard through the grapevine that you guys have some new content going on. Well, you're the content kings over there at Tasty. So tell me what you guys got working on.
I like that, man. Content Kings. It almost sounds like a movie or something. Mm-hmm. Yeah, we got a bunch of new content, actually. We've extended the network. There's a few shows actually after the market closed nowadays. We've got a couple of new people. Like we have, some people that sort of aimed at the TikTok audience. So they have a couple of shows, and then your boy here has a new show as of right now. I have a show called Engineering the Trade. Actually, comes on every day at 1:30 Central, 2:30 Eastern. So been loving it, man. And the idea there is just I think I've mentioned it before, but I was a chemist and an engineer. That's what I went to college for. And so the idea of, as engineers, I think there's a lot of engineers who are attracted to trading because you feel like it's a problem you can solve. And the market has way too many random moves, right? Almost like we're seeing today. And so I think it kind of lulls a lot of engineering and science types into the market. And so I think, one of my biggest things, my approach to the market is always picking, adding, finding little pieces as to what's going on. I mean, there's never just one thing, right? As we'll discuss today, there's always a couple of different things that make up the market that we're seeing.
Yeah, that's Very good point. The technical side of things, it's really the same brain when you look at engineering and investing. Unfortunately, I can't say I'm with you there as a liberal arts major. It took a lot of long nights to get this stuff down. But, hey, TikTok, I mean, I wish I was good looking enough to be in front of a TikTok and do all that. But, I'm glad you guys are, branching out. That sounds awesome.
Yeah, it's pretty cool, man. I mean, two TikTok people, Kayla Kilbride and Errol Coleman, they have a couple of shows. They're also like shorter as well, which makes sense, I guess, considering their audience. We got, the Jones and Gray show, which is one of the highlights of the post-market programming with Victor Jones and Ryan Gray. So we got a bunch of stuff going on, man.
Cool. Gotta capture those short attention spans.
For sure.
So, my last episode, I talked with Adam Warner earlier in September, right around when the seasonality really started to rear its ugly head. And I'll ask you the same question that I asked him. Is this historical period of underperformance and choppiness this time around something more? Is there something greater at play? And, why is it so volatile and choppy this time around?
Yeah, I noticed, and I guess unsurprisingly, there's been a lot of that talk about the seasonality of September. Of course, we're starting to talk about. I'm sure every October we seem to get this more conversation about how the different moves we've seen historically in October. Of course, the '87 crash and some of the others, and those are valid, but I mean, honestly, more than anything, I pay attention to what's in front of me, right? And what's in front of me is the volatility that you speak of that we have right now. And there's probably a little bit more to it. And I always look at, like I just said earlier, the different pieces that add up. And that's usually the one thing that really sort of gives you an idea of how nervous we should be. Mm-hmm. There's a real wall of worry right now, if you will. I mean, let's name them off. We got taper talk that's been going on. We got the rising rates that we've been seeing in yields more recently, which has affected tech, of course, because of that inverse relationship with 10-year in tech. Mm-hmm. The energy crisis is hard to miss, and then we're going to, chat more on that later. Inflation, of course, I mean, that's just a real thing. We've seen it in the prices for everything that we buy and we pay for more recently. And then, the Evergrande crisis, I mean, that almost took us down. That was really interesting. But the truth is that it wasn't something that was systemic to any U.S. equities that we know of. There's a list of companies in the U.S. that have bonds in Evergrande. You can find that list. I think BlackRock is probably at the top. But it's not a situation of I think for a while there it was being almost felt like it was a situation like an AIG during 2008. Like, this is something that is so ingrained in the fabric of finance that it's just going to take everything down. And I think that's why the markets really reacted, right? Because it already had the dominoes of taper talk, rising rates, energy crisis, inflation, then Evergrande. It was like, oh my God. And then everybody relaxed, calmed down, because they realized, this is not the thing. And then as soon as that kind of washed away on the shore, the debt ceiling came up. Right. So what are you going to do?
The Evergrande stuff was funny because I remember reading an article that was comparing it, like you said, to AIG and housing and everything. And that just that came and went as quick as it, arrived. But it just feels like there's just so much more going on now. And I do want to focus on the first one you said, which was, the taper talk. One of the more reactive moments was September 28th. I think that was when the Fed said it was going to, scale back its bond buying. That sent the 10-year note soaring, climbing again. I think it was as high as 1.55% today. When this bond yield choppiness happens, we know it's super sensitive to the stock market. What vehicles or methods can an options trader use to take advantage of this volatility? And is it as simple as saying, looking into an ETF like TLT?
Well, let's identify first the idea of bond prices and bond yields move in different directions, right? And so TLT is the 20-year, I think it's the 20-year plus bond prices. So it's prices versus yield I should say it's 20-year plus on prices for 20-year bonds. Then you have other vehicles that you can play yields. We At Tasty, we have, one of our sister companies is the Small Exchange, which is a retail trader focused exchange. And we actually have 10-year yields that you can trade. So it's a little easier, I would say, to conceptualize. I don't know about you, but I don't really know where 20-year bonds should be trading. I mean, right? Like for TLT, but I know exactly where 10-year yield should be trading. It's around 1.55, like you said. And so because we have that 10-year yield product at the smalls, I actually trade that a good bit. And then recently I did this segment on our Tasty Trade Live show. It's called Options Jive. My segment is every Friday. Mm-hmm. And we talked about the idea. The name of the segment was called Friends of the 10-Year Yield. So just to get to exactly what you're talking about. Yeah. And I identified some of the things that move with the 10-year yield in the same direction more recently, because the 10-year yield is kind of this measure of global. I should say it's a measure of the U.S. health, right? Yeah. And so if the 10-year yield's going up, theoretically, certain industries and areas should be going up. One of them more recently has been airlines. Another one has been energy. We've seen oil kind of move up with 10-year, the yields moving up. Financials, of course, is one of the bigger ones. So those are some of the ways that you can play it. You can play it using a 10-year yield product like we have at the Small Exchange. You can also play it using certain industries that move along with the 10-year yield. And you can play the opposite, which is for the last year has been tech, which is, the Qs or any given tech name. Those move opposite to 10-year yields.
I think just the word itself, bonds and yields, that scares off a retail investor so quickly. So to know what is an adjacent impacting sector or area can help them, when they see that, they know, like, okay, now I need to look into this. Even if, like you said, the ratio is inverse, like it is to tech.
Yeah, and the truth is I've always appreciated the times where we have big market moves, from beginning when I just was learning to now, because then you really see the relationships that make sense. And so despite the fact that we've had quite a bit of volatility recently, I mean, we've had, 1% up or down days in the last week. Mm-hmm. You get to see how certain things are moving together or not together. We've seen the tech and 10-year yield relationship has played out consistently over the last 18 months. And we've seen energy more recently starting to move as the 10-year yield has begun to move. So we've seen a lot of relationships because we've had, oddly enough, the benefit of large moves in the plus or minus direction. We've been able to see a lot of these relationships play out. And it makes a lot more sense, I would say.
Yeah. And from the Schaeffer's perspective, these big moves, more traffic for us, because people are so interested in seeing, oh, wow, 400-point drop. What does this mean? Rush over to Tasty, rush over to Schaeffer's, and, here's where we have the products that help people understand this and take advantage of it.
No question. Yeah, I would agree.
There's so much going on, like we've talked about. Often feels like the energy situation is getting swept under the rug, especially as it pertains to Europe and the supply chain. And then now we've got natural gas looking at steepest one-day loss in a year, I think, today. What should forward-thinking traders be looking at overseas as to how these things can impact, the U.S. market ecosystem?
Number one, keep a close eye on your gas bills. Good Lord. Mm-hmm. I mean, it might get a little crazy in the coming months. If we have, a serious cold snap, we could see some surge in prices even more, because a lot of these companies, who are not hedged themselves, are going to have to go out and buy spot prices. Mm-hmm. For natural gas, for example, right now, the biggest thing to pay attention to is what they call that widowmaker spread. So if you pull up nat gas and you look at the different futures, if you look at the spread between March and April, which signifies the end of winter, that's what's called that widowmaker spread. And right now it's about, 1.6, I think $1.60, BTUs or whatever, between the two. And to give you an indication of how far it's moved, in June it was 40 cents. So it's like quadrupled in the certain amount of time. So that's one of the things that energy traders are watching big time. But when you look at the performances of key commodities over the last, I should say it's from September, like in September alone, mm-hmm. nat gas moved 32%. Another big one was this is not energy, but cotton moved 14%. So, You could expect to maybe pay more for close at some point because that's how these things end up playing out. On the other end, gold and silver have been down. I mean, gold's down 3%. Silver was down 8% in the month of September. So nat gas has been really on the move. And of course, crude. I mean, crude's up 10% in the month of September. So energy prices have really skyrocketed more recently. And I think the thing to really notice is how many central banks, I think, I don't know if quite many in Europe yet, but you've seen central banks starting to raise rates in not only anticipation of eventually U.S. raising rates, but also to counteract this situation that we're seeing with the energy prices. So I think at some point, many in Europe are going to raise. I mean, I think Russia raised more recently. Who knows if they're going to have to raise again because natural gas really hits them. Of course, they have the biggest natural gas company in Gazprom out there, but I mean, it's a real issue, and it's something to pay attention to going forward.
Well, if you really want to get deep in the weeds, you have Germany, which is working out an entirely new coalition, and that's a multi-month process, and that's one of Europe's leading countries when it comes to their presence in the ECB. So you almost have to kind of wait for their dust to settle before you see what they're going to do. And it's all seems like it's kind of piling up into this perfect storm, no pun intended, in the winter. I love reading about the supply chain stuff because I don't know, it seems so real.
That the supply chain is definitely another thing that's really super interesting. My wife actually works in supply chain, and we talk about different stuff all the time. I mean, the idea of the crunch around Christmas is going to be crazy. Mm-hmm. What Target and Walmart, I think they're hiring probably 100,000 people each. I think that's what I heard, but they're going to need it because that you have, I think right now, which is, I can't remember if it's the largest port or the second largest port right outside of LA there, like Long Beach or whatever. It's, there's all kinds, if you look at a map, you'll see all kinds of ships just sort of waiting outside that port to drop off cargo. So supply chain issues are a really big deal right now, and it's real.
Yeah, you mentioned Target hiring a bunch of people. In how it's all connected, you look at the ADP report today, which I think was its highest since June. And that's a good sign going forward, but how much is that really going to impact the things that we're really looking at, which is the inflation and the natural gas prices and the stuff that affects average Americans' wallets on a day-to-day basis?
Yeah, man. I mean, these things are hitting our pockets, dude. Like, we need some action, or we got to figure out how to hedge ourselves against these natural gas and moves in prices.
Yeah,
and food.
That's what I think. A retail trader has to look at a situation like this and say, okay, you can go to the grocery store and notice that there are lots of products off the shelves. You drive by and you see every other store saying they're hiring. How can someone make money off of that? And I think that's an important question to ask.
Fully agree.
So, as we're moving into the fourth quarter here and closing out 2021, beyond what we've already talked about, and really we've bounced around all over the place, what are you looking for as far as storylines to end the year?
Well, we can look back at how our year started. I mean, the names that we saw moving earlier in the year, which were, some of the GameStops and AMCs, what's going on with that now seems to be a little bit muted. So, you wonder how what's going on with the Wall Street bets crowd. It's kind of quieted down some, but there's still been, evidence shows a large amount of trading from retail traders. We look at one lot trades and we still see that higher, not as high as it was last year, but definitely higher than it's ever been. So that's good. I think a lot of self-directed investors continue to trade, and who knows better how to trade your money than you. So I think that's pretty awesome. We see, cryptocurrencies are really, really taking off, and I think they're not quite a force to reckon with yet, but I don't think they're going away. I think, a lot of us, myself included, a year or two ago, we're just kind of like, okay, this thing's going to fade away, but it's not. It's actually a big deal, and they're becoming more meaningful, and they're becoming less volatile, I would say. Bitcoin's back over 50K now. We saw the big big move in May to the downside. That was kind of scary, but they seem to have calmed down in a way. And as a matter of fact, our small exchange just created a cryptocurrency product, XCCX. So
I saw that.
That's in the nascent, stages of being a small exchange product. So that's pretty cool. Overall, I guess, we got earnings coming up for the fourth quarter. We'll see how things play out. We already know earnings aren't going to be what they were a year ago, but they're still going to be interesting nonetheless. So that's kind of a lot of things I'll be looking at.
Yeah, I think you covered it. I can't really think of anything else. I have a theory, and it's completely unfounded by any technical analysis, but this was a summer, our first summer, reopening, and everybody was out and about, like you said, catching up on life. I do think that when we retreat back inside for the winter, I sense, a lot of fatigue from activities and everything. I think there will be a return to okay, let me hop on, just see what the stock market is doing. Nothing else to do, stay inside. It's just a complete, shot in the dark, but I think there will be people that will revert to that stay-at-home mentality of just kind of make money my own way.
I think it's entirely possible, and when they do, Tastyworks is ready, tastytrade is ready. I'm ready. I'll be on Engineering the Trade, talking to the people. Let's go, man.
Yeah. So perfect timing. I want you to replug your your new show, and then sign it off with whatever else you want to close with.
My name is Jermal Chandler, and you can check me out on Engineering the Trade every day at 1:30 Central, 2:30 Eastern. Come over and see how we look at things.
Couldn't have said it any better myself. Jermal Chandler, thanks for hopping on again. Let's try to not make it, an entire season before we chat again next time.
Absolutely, my friend. Always a pleasure to talk to you, and can't wait till the next time we do.
And best of luck to your kids. Sweet 16s, pitch, baseball, football. You guys got it all over there.
No doubt. Yeah, we definitely stay busy, but still on the way to live life, in my opinion.
There we go. Love it. Cheers, Jermal.